On today's show, 3 questions. Number 1, what's genius about this bill? Number 2, is a student loan party over? And number 3, who you got in a Trump-Powell boxing match? Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
And I'm Rabih.
Yeah, you are, Rabih. And I've done a wardrobe change.
I did it.
Because I'm a true professional. No, actually, I did the first one from home this morning, and then I actually decided to shower and come into the office. So, but for the marketing team, they need to know that I did this intentionally. I changed my wardrobe knowing we were going to record 2 in one day. So here we are.
I have a lot to learn. This is the moral of the story.
Rabih, I don't want to call it out, but I think maybe you do a little bit. Like, if you want to be a true professional like me, then you need to change your word. I don't know how you missed that detail, but that's okay.
Dude, it's going to be hard to sleep tonight.
Yeah, I'd be so worried about it. So with that said, we are calling it out. We are recording 2 in one day. This is a disclaimer, a PSA, whatever you want to call it, on the very front end of this, that there might be things that happen this next week that we won't be able to cover because this is being recorded the week before. We had to do 2 because I'm a loser and I'm going out of town, and I have what we call vacation guilt. I should be here recording with Rabih. To be fair, Rabih, I feel really honored because I said, hey, why don't you guys just do one without me? And you're like, no, we need you. And I felt really honored by that. So anyway, if things happen this week, it's not being covered on the show because we are a week early. But with that said, Rabih, let's jump into the incredible acronym producing machine that is the U.S. government. What's genius about this bill? Also, excellent question by you. I didn't get it before you told me this, but what's genius about this bill? Let's hit it.
Oh, that's great. So, yes, this is related to stablecoins and the crypto bros. So, one of the few times
They scored a win.
Scored a win. As of now, which, we are in the week of July 18th, right? This is going to be released later on. It has passed the House, and I think I think it got already passed by the Senate. Final stages, it's right there. They'll probably use it for political reasons. But we got a new act, which is called the Genius Act, standing for Guiding and Establishing National Innovation for U.S. Stablecoins. And as the title says, it's about stablecoins. So,
Rabih, really quick, do you know what was not identified as fraud, waste, or abuse during the Doge days, which also was another incredible acronym? You know what was not cut out from Elon Musk's Doge program was whatever the group, a part of the government who does the acronyms, that they are alive and well. They are clearly thriving. Maybe they've expanded that program because they just keep coming out. They got Rap, we got Genius, we got they have a whole team on this, clearly.
Dude, politicians are really bad at marketing. Can we go off a tangent here?
Please, let's do it.
Just because they want to make it memorable, and in this administration, it's all about big adjectives like beautiful, strong, genius, etc. Both are at fault. At some point, it was like Obamacare. Like, why does it have to be after someone's name? It keeps, I don't know, get actual consultants on how to get something memorable.
Yeah, or are they the best marketers ever? Because maybe they are. We don't know.
But it's 90% controversy.
Yeah, that's true. Marketing. So,
okay. So, what have you heard about this bill? Do you think it's a win? Does it justify rallying crypto? Where do we stand?
Rabih, I have no problem saying when I don't know enough to have an opinion, and this fits that category. From what I do know, where the crypto bros are excited about this is that it starts to legitimize. It's like a step towards legitimizing crypto, and it's a step towards, I think from what I've gathered, this is kind of a loss for big banks and a win for crypto bros. So again, that's how I've kind of understood this is a big win in the sense of legitimizing it, getting it one step closer to this being like legit currency and use in other avenues of life.
Yes, you're right. And it is a loss for banks who did not jump on the Bitcoin train yet. So actually, I think Bitcoin has done really well. It was the most underperforming asset during the crash, and now it is slightly under gold at like 27%, if I'm not mistaken. Has done really, really well. Yeah, 26, 27%. Has done really well. I think the essence of this bill is actually to protect retail investors who buy and investors anywhere who are buying a crypto. It does not target anything about like the value of it, or the bill doesn't like support it or this support, if that's the word. Like, it's very neutral stand on it. What the bill in summary says is that if you're a company that wants to give out stable coins, which is part of crypto, we'll get into stable coins in a second, you have to have a US dollar reserve backing it up 1-to-1, just so if people want their money back out of this stable coin that you are issuing, they have their money there. This is like the bottom line, what is in it.
So the response or the reaction right there is, when we talk about legitimizing the currency, is this is kind of a step away from the FTX debacle 3 years ago, and it establishes some level of trust with now, like a new level of trust in society, or at least start to move towards that, which is again why it's a big win, because I think probably the FTX debacle and all Sam Bankman-Fried and all that had to be close to the all-time low in trust of all of this stuff.
It was unregulated and people abused that opportunity.
Yeah.
So here are actually the main clauses. The first one is regarding issuance and reserve requirements, which we just hit on. Stablecoins must be fully backed by a 1-to-1 basis by liquid assets such as the US dollar or short-term treasuries. And if the issuer, like the company that's filing to be licensed to issue stable coins, has a market capitalization that exceeds $50 billion, they have to undergo annual audits. The second point, and here's where like it opens an industry, is licensing and oversight. The bill creates a federal licensing regime for stablecoin issuers, and it is very similar to banking regulations. Also,
except banking's not 1-to-1, right?
This is very interesting. I'll leave that question until we cover those. This is incredibly interesting.
Okay.
I have a lot on it. Consumer protections. In the event of an issuer insolvency, stablecoin holders are granted super priority in bankruptcy proceedings, which is very, very similar to banks right now, because we now deposit our money in checking accounts, right? If the bank, let's say, I don't know, JP Morgan Chase, the largest bank in the world, goes bankrupt and files for bankruptcy, the first people who get their money back are depositors. The second people who get their money back are bond holders. And the last people who get their money back are shareholders, right? So this is very similar to the order of importance. It's called pecking order. In the banking regulations, depositors have senior debt. They are the most senior in terms of the quality and what they get their debt from. Interest restrictions, which is very interesting. Issuers are prohibited from paying interest or yield to stablecoin holders. However, third-party platforms may still offer rewards. And what this means, also parallelism to your bank, you're putting money in a checking account on a saving account. The bank gives you 0.01%, or if it's a high-yield saving account, gives you 4%. This is not allowed. And it's not allowed in stable coins. This is very interesting. And this actually hints on how they're going to be making their money. And the fourth one,
when you say they are going to be making their money, who do you mean?
Stablecoin issuers, those new banks that are going to pop up.
Got it.
Exclusion from securities and commodities regulation. So it's, a little bit on its own. Let me hit you with the market reaction. The market reaction was very positive. Bitcoin reached almost 126, 130 at some point intraday and went back down.
I should have bought it, Rabih. Golly.
You should have started. But stable coins are not Bitcoin, right? Stable coins are those, just for other people who are saying it, haven't really gone into that world and, they're lucky. Stable coins, I had to throw some shade.
We're just like taking casual, subtle shots as we go.
This is a second podcast. I might be passive aggressive.
We're, guys, just so you know, it's Friday afternoon. We're both exhausted from a long week. And just today alone, this is our third time being on some piece of content. So if Robbie's a little bit spicy, now you know why. He's tired.
You know whom I'm thinking of right now? Michelle when she edits the podcast.
I know. She always gets so mad. She literally is like, "Can you please add somebody else to this to the show? I'm so tired of listening to just you and Rabih." So we love you, Michelle.
Okay, so stable coins are actually literally other people's attempt to create a digital dollar. You know, it is the exchange rate at it is stable. It's called a stable coin. If it's $1 today, it's supposed to be $1 tomorrow and yesterday and every other time. And it's backed by the US dollar. So unlike crypto, whether it's, you know, Bitcoin, Ethereum, whatever coin you're looking at, they're going up and down due to supply and demand. The value proposition of a stable coin is that it is stable, which also is risky because a couple of years ago, we've had a bunch of stable coins that went bust. And suddenly the stable coin is trading at 60 cents instead of $1. Like,
Yeah,
what
there was a
stable
huge
about?
one. I can't remember the name off the top of my head, but there was a big one that went out. That was like another kind of FTX level scandal.
100%. And this is what the bill is trying to protect. Do you have any questions before I go into the nerdy stuff that I prepared?
Tell me if I'm thinking about this incorrectly, and I very much could be. But when you talk up, so one of the one of the biggest proponents or people that are huge proponents of Bitcoin or crypto, I should say, is it's kind of, and then maybe this is more of a case for Bitcoin. So go with me for a second and tell me if I'm thinking of this wrong. But if it's backed by the US dollar and the reserve requirement is 1-to-1, doesn't that kind of negate the case for crypto as like an anti-inflationary type hedge or this, right? Because it's just a dollar. It's just a dollar on digital dollar that's backed by the dollar. So if the whole idea of like the government's printing money and this is just making our purchasing power down, like it's the same thing. I guess from that perspective, I don't know if I understand the total point.
No, you're 100% right, because those are two different points. The point of cryptocurrency that is mainstream out there in the world is that this is a decentralized system that will withstand any, you know, failure from fiscal policy when governments take on so much debt. Okay, that is a narrative that is out there. Bitcoin aligns more with that one. The stablecoin narrative is different. It's about the efficiency of transactions. So
Got
to
it.
go to the current world that we live in, if you're living in the US, it's fairly simple how you move money. You could like Venmo if it's a small amount. If it is a big amount, but the money already exists in banks, you could wire them or send an ACH, but you have to sign some documents and you have to make sure that the banks communicate with each other. But once you try to go international, fees rack up and you'll get interrogated on the phone on why are you sending money left and right. The idea is, instead of having the current system where every bank is trying to create connections and hopefully let your money go through, a stable coin lives on a blockchain. And that blockchain already connects everyone to it to start with. So it's the ease of transaction, of moving money around, etc. And that's what they are pushing for. Why doesn't the government do it itself? This is interesting because a couple of years ago, during the Biden administration, they were looking into, and the Federal Reserve said it themselves, looking into their own digital dollar. So they did that infrastructure was now kind of given to the private market to build up, rather than have the government build a centralized stable coin blockchain for everyone, which is interesting.
Got it. They're letting the private industry do it, build it, and then they'll just regulate it.
100%. They're just regulated with what they're doing here. They're putting a reserve. But what does this mean? This means that any new, let's call them stablecoin issuers or the 21st century banks, they're going to come up and they're going to start issuing their own stablecoin. It's not like there's going to be one stablecoin for everyone. They're all valued one-to-one towards the US dollar, but there could be a stablecoin issued by Matt and a stablecoin issued by Rabih, right?
Wait for it. There's going to be a 2-cent stablecoin. Just wait.
A 2-cent stablecoin that is not valued at 2 cents, but pegged one-to-one to the dollar.
Exactly. It's confusing. Yep.
So the idea is that you're going to have multiple companies issue something that at the base level is the same, is interesting, and could be an opportunity, could be a threat. Because, and here I'm full disclosure, I'm going to nerd out. I've been waiting for this. If we go back,
people right now are listening are like, now you're going to nerd out? Wait, like that begins now? Like, what were we doing before?
The answer is yes.
Cool.
Okay. So if we go back to pre-1913, before the Federal Reserve was created, your eyes are rolling already.
No, I love this. Are you kidding me? We talk history all day long.
Yeah, I know. I'm just giving you a hard time. I told you I'm passive aggressive today.
You really are. You're spicy.
With all love, the idea was pre-central bank, the power to print money belonged to every single bank out there, right? Every single bank could go and give you a loan. There wasn't a central bank. People would just go to a random bank, JP Morgan, give them your silver, give them your gold, give them your, fiat money tenders at that point, the US dollars, and they are free to issue as much loans to other people as much as they want. There weren't requirements to have it one-to-one. See, here's where I come back to it. There weren't requirements to have it one-to-one.
It was
Later
based
on,
on bank to bank to bank. Every bank had their own policy,
had
basically.
their own policy. That created a lot of credit bubbles. And that's why we used to say, oh, previously we used to have more recessions than we do now, because now credit is regulated much better. So every single bank could issue as much loans as they want, and it was survival of the fittest. If you could avoid a bank run, you're fine. But with the banking system, when one bank gets a bank run because people are afraid, everyone gets affected. And that's why it's systematic. So the idea was, hey, you can't just issue loans on your own that is creating money. When you issue a loan, you're creating money. It's going to be centralized with the federal government. By one, they are the only ones that print actual money. That was the job of the Federal Reserve. Two, they decide on how much loans you could give up. And by deciding the reserve amount, that's what they used to call the fractional reserve. It's like 9, 10%, etc. What's interesting on it is that it controlled it. Will that control be there with those stable coins? Hopefully, yes, because their backing is one-to-one. In the current banking system, if after the 2008 crisis, looking at like the Basel Accord, everything that's now in there, the amount of reserves and backing that is required depends on the asset that you are using it as a deposit. So, for example, if we are the consumers, went to a bank and deposited our cash, a cash is a very stable security. Not everyone wants it. Probably the reserve requirement on that is 40%. Doesn't have to be fully backed. So they can loan out 60% of it. This is what I mean. But if we deposit stocks, they might not be able, or if they decide to buy stocks, they need to make sure that the equivalent value of it stays with them to prevent a bank run. If they are holding crypto, probably a higher percentage. And if they are buying treasuries, it's less than 1-to-1 because it is very easily interactable. So the amount of reserves that you should put up as collateral when you hold these stuff on your balance sheet depends on the volatility or the riskiness of it. So 1-to-1 seems like strikes a middle ground. They're not saying, hey, this is something very safe and you can loan a lot of money out, but they're also not saying that this is too risky that you are required to hold like 300% its value on your balance sheet just because it's going to fluctuate. 300% value is kind of what we had with those very bad mortgage-backed securities in 2008. So here's where the nerding segment ends up. And so you survived the journey, man.
Okay, I thought you were going to say, here's where it begins. I was like, no, we're already in it, guys. We're in it.
It ended. What this means is that hopefully the regulations that are imposed on banks are carrying forward, but it's not a lot of regulations, just enough regulations to get the industry up and running.
That's super interesting. And I can't help but think as you bring up the creation of the Fed in 1913 and all the bank runs and all the struggles, like the reason the Fed was created was because it was like literally the definition of the Wild Wild West. But that didn't stop the Great Depression from happening. And in fact, the mismanagement of the Fed and the Great Depression is kind of what exacerbated that, right? And starting in 1929. The reason I bring that up is I wonder, Rabih, like is this a fair way to think of it, kind of comparing those times of saying, this is the government's first attempt to legitimize this and make this regulated. But I can't help but think this, like, there's going to be something as far as either a fraud or something that leads to further regulation or them having to revamp something. Is that a fair way to look at this? Like, this is just like an attempt. They don't really know covering all their bases because they don't actually know what this could look like. Yeah. Is that fair?
Yeah, because we really don't know how we're going to be using this one, right?
Yeah.
I think what this didn't really impose any restrictions on how people are going to be using stablecoins, whether they're going to be, transacting, getting their salaries, etc. Like, to what extent will this propagate into the economic machine that we live in? We still do not know.
Yeah.
But what it did, it kind of restricted the way money is made from it, and so it's more focused on how greedy can those stablecoin providers become. Because let's go back to the analogy of the banks that we transact with right now. How do they make their money? They make their money on small commissions here and there, right? Overdraft fees,
Fees, yeah.
etc. And they make money on investing the money that you deposit. So you deposited $1 million in your checking account, etc. They are betting that you're not gonna come and take it. And actually, I don't know if people know this, but if you go to your bank account right now and you take a big sum of money from a branch somewhere in a suburb, they're not going to have $1 million in the vault to give you. They'll tell you come a day or two later and they'll prepare it. But if everyone does it at the same time, that's the panic, because you deposited $1 million, and let's assume you're the only depositor on the planet. They have loaned out like probably $900,000 of them. So for them to give you your money back, they have to go and collect them. And why did they loan them out? Because when they give out loans, they make interest. So this bill does not allow, says a 1-to-1 ratio of backing. This means that you can't loan money out. So where does this leave us? This leaves us that they can't make money out from the loaning, and they have to focus on commissions. Whether it is moving your money from US dollars to stablecoin, from stablecoin back to US dollars, they're gonna take commissions. It's gonna be like a certain exchange rate. It'll be like, oh, you want $100 worth of stable coins, and each stable coin is $1. Maybe deposit $102, and they will take that $2 from you. And this is how they're going to be making their money, right? And the third way they're going to be making their money, which is incredibly interesting, they said no interest on deposits. So if you put your money, they're not going to give you what a high yield saving account gives, and they were not going to give you the 0.1%. But if you look at each person's pocket at this point, you went in and deposited $1 million of US dollars and got $1 million of stable coins in your pocket. You could do whatever you want to do with those stable coins. What is that bank doing? They have to keep the reserve. So they're going to invest it in treasuries, because they could move from
and
cash.
They're going to get the spread.
So instead of you getting that small return, they're going to make that small return, and you won't get anything.
Okay. So that's what I'm struggling with. And maybe, again, I'm too dense and this is way over my head, but I understand the win that people are calling this for the crypto community, of saying like, this is a step further of like trust and moving it forward, of legitimizing this. But am I wrong in saying, just based on what you just said, I'm still struggling to think like, what is the use case here? It needs to be fully adopted as far as like transacting. I understand the future of this, of what it could look like theoretically. But like, if I'm talking to a dentist who's got $1 million they want to put in, or 500 grand, whatever amount of money, and it's like, this is cash I don't need, I want to put it somewhere, why would I ever tell them to put it in stablecoin versus like a high yield savings account?
It's not because of the usage. It could be much dumber than that, and that's, I think, what narrative.
Perfect. To hit me with this. Like,
I know,
dumber, yeah.
Like maybe the idea that there's an act coming out, etc. Could it just be that banks have squeezed each other out so much that they compete? The competition is so hard between each other that they can't make commission. And now they've seen an opportunity of people rallying about something, and they're trying to make a business out of it. It's new. It's not transparent. We can cut as much commission as we want. I think that's what it is.
Yeah. Which is, again, so interesting of this whole, like, this is what I've said about all of this stuff for so long. Back in 2020, when people were freaking out about all this changing the world and Ethereum and Bitcoin and all this decentralization, it's like, this is not bigger than the market, and it probably never will be. Like, look at this right now, what you just said, Rabih. Now this is just banks getting on board, and they're going to find a way to make money off of this, off of the excitement and the momentum.
There's no actual usage for it right now, right?
Yeah.
Like, you could use your dollar for most of the stuff. I don't know. I don't yet see the marginal benefit of having a stable coin that you can transact anywhere. And just because there is demand, and this is very interesting, this parallelism with Bitcoin. Before Bitcoin was regulated and we started having futures on Bitcoins and the ETFs on Bitcoin, which are a resemblance that Wall Street was able to, swallow that industry and start making money out of it. They were talking about deregulating and blocking Bitcoin, just like what China was doing. Instead of it's either you're either an enemy of the financial system or you're part of the financial system.
Yeah. Yeah.
And now this has become a part.
Yeah, that's the thing, is you're going to get swallowed by the financial system, which is what Bitcoin has been, and which stablecoin and all of this crypto, it's just now part of the financial system. So again, I'm not saying it's not changing the world. I think it very much is. Blockchain technology is clearly changing the world along with AI. That doesn't mean that any of these things are viable replacements for our current currency.
They are based off of it.
Exactly. They're based off of the actual currency. That's my whole point. Okay. I feel good about that. You feel good about that?
I feel good. Yeah, it makes sense, because whenever something new comes in, it's like, I need to rationalize and understand this one. This act isn't that genius. Like we broke it out down in 27 minutes.
Okay.
It's fine.
Okay. So we need to send a message to the government and say, you got to work on that acronym. Okay, let's start shutting this down, Rabih, early, because I think you're probably at your limit here. Is the student loan party over? We have mentioned this multiple times. We did a emergency pod with Jake and Taylor when the Big Beautiful Bill came out, and people were asking a ton of questions, rightfully so, because of all of the changes they were making to student loans, specifically in that bill. We're not going to cover any of that today. Again, if you want to know more details about that, you should go check out the podcast that Jake and Taylor did. They broke it down in detail of what's happening. But what we did want to cover on this, when we talk about is the student loan party over, we've talked a lot about this internally as a team. It is kind of crazy, Rabih, that there are dentists out there, many dentists out there, that graduated like 4 years ago, 5 years ago, that have, in fact, now there's multiple classes of dentists who have come out who have never made a student loan payment. It's going on 6 years now.
What a life!
What a life! Which is great. I mean, they've had this party. They've had like a no payment party. That would have been better. Is the no payment party over?
Ladies and gentlemen, this is how Matt comes up with questions.
Dang it. I need something to entertain me. You know what I mean? Okay. But so it's literally gone now 5 years, with no payments because of all the back and forth. Now that this bill's come out, it's signed, it's in place on the save plan, interest is now starting to accrue. What we have seen in the data, and Rabih, you're the first one that brought this to me, is the flow into early delinquency. So this is specifically the percentage of balances that are 30 days or later as far as payments. So late payments of 30 days or more. If we can't, you're not seeing this visually, so I'll just describe it really quick. Basically, when it comes to student loans since 2020, it has been, those delinquencies have been they've been zero. There's at the floor. Literally in the last month, it has shot. It's a straight line up to now delinquencies are over 8%, meaning 8% of student loans are now delinquent, which is 30 days or later on their payments. Like, it's a pretty stark jump, and this could be getting worse. We only have this data from this recent report. And then the other thing I'll mention here, Rabih, on top of this, and I want to throw it to you, is if you look at this trend line, the other main loans on here, auto loans, credit cards, and mortgages, all of them are trending up.
Yes.
So delinquencies across the board are all trending up. I'm going to kick it to you to give us the wisdom.
Honestly, you would expect to see that when you are trying to slow down the economy. And what I mean by that is raising interest rates, as we've seen in 2022. It should make the economic machine run at a lower rate per minute, like the rotation. It's moving a little bit slower. And honestly, not every citizen in this country has their budget or work with a financial advisor and have a good savings cushion. So the lower income people are going to be hit first because their savings are depleted first. And so far, it has shown, and if I recall the graph correctly, student loans, automobiles, and credit cards all are right now at 8%. So 8% of all these loans combined are 30 plus days delinquent. Those numbers are fine because mortgages are still much lower, right? Mortgages
are trending up, but they're at like 3.7%.
So only 3.7% of mortgages are 30 days delinquent, which is fine. It's a small crunch on people. Hopefully when interest rates get cut, in a couple of months, that will create some easement. I think on the graph, you have the '08. How high were the delinquencies in '08?
Yeah, '08 credit cards got pretty close to 15%. Mortgages went up clearly, and obviously in '08, mortgages at the peak got just below that. It looks like, again, it only has like 5% increments on the graph, but it got up to like 12, 13%. Student loans were nearing, student loans have been higher than 10%, 11%, even post '08, '09. And then auto loans got above 10% as well.
So we're like a third of the way on the mortgage, right? And like 40% of the way for a recession territory on the other types of debt. So it is an early warning sign. This is all this is. This is an early warning sign that maybe the consumer is now getting hit. I think as long as the unemployment rate does not shoot up and people get fired, those will stabilize. But if people start getting fired and they have outstanding payments, including the student loans that just came back on, we will see that rise back up. And then, just for people to follow the rhetoric, we would be looking at the bonds of companies and see whether the credit spread over there is widening. And that would be the typical textbook reaction to seeing a stock market drop, a recession happening. So we're still in the very early beginning, but it's a warning sign if you look at the data.
Yeah, it's a great point, Rob. It's a bad trend, right? It's a negative trend that we don't want to see. The way I look at it is, we've talked about this before, it's just one more factor to increase the risk, or maybe the level of circumstance, is when one of those big pieces fall. So like the big pieces, and the big piece being the job market. So that's how I look at this, is like, this is not an indicator of it going to recession, but it is an indicator of maybe the depth or severity of a recession, or the speed in which it could happen if all of a sudden the job market just completely flipped. Is that a
100%.
fair way to look at it?
What holds the economy is the job market, because consumers are 70% of the economy.
Yeah.
Can't wait for a world where AI and robots are there that would make the unemployment rate, irrelevant, but we're still far away from there.
Yeah. One thing, let's see if I can get this really quick, Rabih, because you sent me the report. Oh, here we go. So just to put kind of, so it looks like the whole balance sheet, this JP Morgan report that we pulled this data from, to give more nuance, of we're saying 3.7% that are delinquent, or mortgages are delinquent, right? So just to put this in context, if you look at the total liabilities of the consumer balance sheet, 67% of debt is in mortgages.
Yes.
Right. So I think, just to give that some context, of saying, to repeat back what you were saying, is like, as long as mortgages stay relatively low, even though they're not trending in the right direction, that is the big one. That's what the most debt sits in. Almost 70% of consumer debt is in mortgages. The rest are kind of smaller pieces.
Less
It's
than
not as
10%.
scary. Is that a fair way to look at that? Okay. So the party is over, it looks like, but still, it's not like the cops have come, crashed it. I think people are just kind of starting to slowly make their way
What
home.
do you think people spent their student loan money on? The one that should have been
Yeah,
going to student loans. Where
yeah,
was it spent? I do not know. Where was it spent?
that's a good question. That's what so legit. I'm glad you brought that up, because this is worth talking about for a second. When it comes to the dental space specifically, if you look at like the macro numbers when it comes to student loans, it's actually not that, like, I think people get really dramatic when you talk about this in regards to like, what is it going to do to the economy and all this. On the grand scheme of things, I'm not trying to minimize it, but a good portion of student loan balances is like less than $10,000. Right.
Mhm.
The average payment of student loans, I don't have it right in front of me, but it's something like a couple $100 a month. Like, it's not dramatic. It's not like, I don't see the numbers supporting student loans turning into this massive crisis, just because when you look at it dollar, or like person to person, it's just not that big a deal. However, where this is actually a big deal, I think a bigger deal, is in the dental space. I really do, because
Okay.
we've looked at this. If you look at, like, we literally have clients we've been talking to recently with this change, and now we're like, hey, the party is over. We've got to start addressing this. Payments are going to turn on. Even if you were to kick the can down the road and stay in the save plan, let's say you're on save, interest starts in 2 weeks. So interest starts before you can get on the wrap plan next year. So you're either refinancing or you're recertifying. Your payments are kicking on. We've talked to some dentists already that are like, there's $3,000 or $4,000 of payments kicking in right now, or that they're going to kick in within the next few months, next year. So that's a big deal. That could be a big deal depending on where you are, stage of your career, associate, startup owner, whatever. It's actually I think a pretty big deal in the dental space. So to your point of like, where's this money been going? I do think there's a lot of dentists out there right now, probably like, crap, I haven't really been planning for this because I just
This
got
is the hangover, right?
This is yeah, now exactly. This is the whole unfortunate hangover for sure. So more to come. Again, this could change. We know this from student loans. Look at all the changes just over the last 5 years. There's a lot of factors here and a lot of changes that could be made. It'll be interesting to see if they carry out this cap. That's really interesting that they've implemented. I wonder how that's going to play out. But more to come on that. All right, last question, Rabih. Who do you got in a Trump and Jay Powell boxing match? Who takes that?
Honestly, now there's no sports, like no football, no basketball, nothing to. There's some
So you'd
golf,
watch
but I'm
this?
not big. So I'm watching Powell versus Trump. This is the entertainment you could find. Just to give you the last update. So the president can't really fire the chair of the Federal Reserve, but the chair could be
persuaded
to resign if they want to, or if it went to court over national security concerns or corruption or some ethical thing coming up, they could get the Fed chair out. But it wouldn't be like president firing the Fed chair. It would be the Supreme Court, because this is go to the Supreme Court. The Supreme Court judged that this person is not working in the best interest of the country, violated X, Y, and Z. He should be replaced. Those are the scenarios. All just wait until the term ends.
I was just going to say, why would you even come close to doing that? By the time that's done, he's done anyway. Yes. He's done in May of 2026. This just feels, I'm just like, what are we doing here? Why are we even talking about this? I mean, I genuinely want to know who you take in a boxing match. If they had to box,
have you seen Jerome Powell? That poor old man is so skinny and tired of looking at spreadsheets.
Yeah, but he could be wiry, man. You never know. He could be really wiry. I could see Jay Powell coming out and throwing some haymakers and being like, whoa, where'd that come from? I'm just saying, don't rule him out.
I'll have to go with physics. Not calling Trump fat, but just looking at
weight heftier classes, than Jay Powell.
Weight classes,
that's fair.
It'll be the president who wins in a physical fight. So the last update on it is that they kind of toned down the stupid versus too late Powell versus all these name calling online, and they opened an investigation / probe into a $2 billion renovation of the Federal Reserve building that happened under Jerome Powell's term. And they're saying this is much more expensive than the renovation that is happening. You need $2 billion to renovate the Federal Reserve building, etc.
So they're trying to call corruption or something?
They're trying to find something on him. Probably not to actually get any resolution out of it. They do not care about the verdict, but it's more as now they have a card in their hand to pressure.
Got it. I guess again, something maybe over my head. I just don't understand, like, why is this even a topic? I mean, I know Trump wants Powell to lower rates. He's been pressuring him for a while. Powell's held strong because he's following the data, but everything looks good. The economy, markets are great. The timeline, I think, if Powell had 2 more years or 3 more years in his term, fair. I think it's just a fair discussion in regards to whether you agree that Powell should step down or be fired or not. Regardless of that, just to understand logically from a time frame perspective, what are we doing here? Just let his term be up in May. By the time you got anything done, even if you're going after this corruption argument, by the time all that played out, he's done. I just don't understand what we're doing here. Why are we even talking about? They're not saying you and I are going to talk about this because, this is what we do. But I don't understand what Trump or the administration is trying to pull.
I think it's more politics than anything else. It's not really economic, not based on anything. I pulled up the betting websites just for fun because I want to know where people stand on this. And we got Polymarket and Kalshi, which were the largest 2, the ones that did predict Trump's win. because if we assume like betting markets process information like markets and they are efficient, a poly market as of now is putting a 31% chance that Trump will be successful at firing Powell in 2025. And then Kalshi is putting a 22% chance that Powell is going to be out as chair this year. So it is there, because if they really, I don't know, if they go in and into this probe and they actually find very valid evidence really quickly about corruption, I don't think the administration is going to back out. They'll take it as a political way. So there is a 20% chance, right? But
Yeah.
let's not forget the 80% that this is just going to be noise until the term ends.
Yeah. And I guess I also don't understand. I feel like objectively, Jay Powell has, I mean, truly, we've joked about, again, calling him Jay Powell on this, but it's like, again, all jokes aside, it's like, how do you not, he's done about as good of a job as you possibly could do with what he's been dealing with. Is that, I mean, I don't know how you could make an argument against that.
No, this is my own personal opinion. I think we both share the same opinion. In hindsight, you could always say, oh, you could have optimized there. You could have been quicker on
The inflation
targeting
stuff. Yeah.
inflation. You could now be faster on starting to cut interest rates rather than to wait until the data actually, because we're seeing slowdown. You could say that, hey, it could be optimized. In your position, I think, and it's not just Jerome Powell, by the way. It's an open market committee of 12 members, and they
Yeah.
usually
He's just like
vote
the head
until
of
it's
it.
a unanimous vote. Like
Yeah.
it's 12 people who are doing this. They'll have disagreement, but every single vote, it's been a unanimous vote or a very high majority vote. So that committee has always done a decision that positions them in a place that whatever the economic outcome shows up to be, they have tools at their disposal to steer the economy back on their. So instead of, they were trying to be as robust and agile as possible to handle all different scenarios that the economy, which is a really good position than trying to just shoot for the best case scenario. Also, one last thing, usually the market and the Federal Reserve diverge on opinions. With this term, it didn't happen as much. Usually there is a fight. The market thinks something, the Federal Reserve thinks something else. And whenever the Federal Reserve goes up and makes an announcement, the market reacts and rallies a lot. This has been one of the calmest Federal Reserve terms we've ever had, whether it was Powell, Janet Yellen before him, Bernanke, and, stemming all the way to Volcker when they started announcing and being more transparent in press conferences. The market likes him, not him, likes this open market committee that is making the decisions. They agree on most of the decisions except for a couple of months, which is rare.
Yeah. And politically, it would make sense to me that, again, I'm probably missing something, and there's probably people like yelling right now of like what I'm missing or what I'm not getting. But like it feels intuitive to me that that Trump should be would be looking at what's happening with the Fed and the market and the economy, all the numbers, and taking all the credit. He appointed Powell. So I guess I'm just confused as to why I think most people would look at this and say, things look good. I appointed this dude. He handled it like a pro, although not perfect. Like, I guess I'm confused as to why that's not the message. Like, I take credit because look what we've done, and I appointed this guy, and I'm a genius. And
you're asking me to understand the political calculation in Trump's mind. I'm sorry.
No, it's more just like, it's more my stream of consciousness openly trying to figure out the strategy here. But again, above my pay grade. We digress. Rabih, anything else you want to mention? So you take Trump in a fight. I think it's a battle.
Yeah.
It would be tough. I just think Powell would be
We
wiry.
will actually see. So for people listening to this podcast when it's released, speaking from the future, we will see a new round of that fight next week, because on the 1st, there's the meeting that we won't have another one till September, where interest rates might be cut. It would be a surprise if they do, because the market doesn't expect it to happen. But if it happens, there will be a round. Someone will take credits. Probably it won't happen, and we'll continue hearing the name.
The fight. Yeah. I can't imagine it would unless something changes from now until this is recorded or released. So, okay, Rabih, thank you as always for being here. Everyone, thanks for listening. If you're listening to this and thinking there's a dentist out there that needs help or that would find this valuable, we'd love for you to share the episode. Share the podcast, share the episode. We hope it helps. We hope it's somewhat fun and entertaining. We have fun with it, even on a Friday afternoon when Rabih is exhausted and ready to shut down. Rabih, go just don't talk. As you said, before we jumped on, you said you weren't going to talk anymore. So you can officially stop talking. Everyone, thank you so much for listening. That was our 2 cents. Till next time. Bye-bye.